Good morning, ladies and gentlemen. This is Alex, Senior Account Executive at GDMFX, with today's European Session Outlook. North American markets is the beginning. The pace of hiring in the United States slowed in August, but the drop-off probably wasn't weak enough to force the Fed to reconsider plans to raise interest rates this year, as the unemployment rate fell to the lowest level since 2008. The unemployment rate came out at 5.1%, which is 0.1% better than expected. The NFP, 47,000, worse than expected at 173,000. Wages also picked up last month, perhaps a sign that falling unemployment and scattered labor shortages are pressuring more companies to increase pay. That could also help raise the economy, of course. Average weekly hours also came out, 0.1 points better than expected. In Canada, we had the unemployment rate at 0.2% worse than expected at 7%. Net change in employment in Canada, 16.5 thousand better than expected. And the IV Purchasing Managers Index in Canada, 6 points better than expected. The biggest mover was the USD JPY, 120 pips down. Next biggest mover was USD Canadian dollar, 90 pips up. Today is Labor Day in North America, thus we won't be having any news or events from there. Alright, onto the EU markets, where in Germany we had European stocks fell Friday and finished lower for the week, weighed down by disappointing German manufacturing data. And the US jobs report also was viewed as decent enough to allow for an interest rate hike this month, and that's why European stocks fell. The German factory orders had heavy declines year on year, negative 0.6% compared to 7%, and month on month negative 1.4%. The Swiss CPI year on year came out as expected at negative 1.4%, and month on month as expected as well. This morning, German industrial production month on month is 0.3% worse than expected, and year on year 0.2% better. Lufthansa pilots are planning to go on strike, and I'm saying this as they are included in the DAX, which went down 190 points, and the CAC 100 points. Investors will be waiting for tomorrow's Swiss unemployment rate and EU GDP data. In the UK, the FTSE fell 100. The FTSE 100 fell 2.4% to 6,042. The index fell 3.3% in its second weekly decline in 3 weeks. Investors will mainly be focusing on events from Wednesday onwards, as we have some quite important data. For example, the GDP estimate on Thursday, interest rate vote and interest rate decision. Bank of England minutes, the monetary policy statement, and housing price balance. And to cap off the week on Friday, there are also consumer inflation expectations. So it's going to be a good week from Wednesday on. Asian and Pacific markets, Asian stocks fell, with the regional benchmark index heading for its lowest close since November 2012. As a stronger yen weighed on shares in Tokyo, and investors awaited the resumption of trading in China following a holiday. The Japanese coincident index for July came out slightly lower than previous, now is at 112.2, previous was 112.3. The Japanese leading economic index for July is also slightly less than previous, now at 104.9, previous was 106.5. The Aussie gained against all major peers Monday after earlier dropping to 68.96 US cents, a level unseen since April 2009. The Aussie is moving almost in lockstep with China's tumbling equity gauge, helping it slide to a 6-year low last week. The Australian Performance of Construction Index came out, 53.8 up from 47.1, and Aussie JPY was 22 points down on Friday. That was the biggest mover. Commodities, oil declined for a second day as Venezuela proposed an OPEC summit to stabilize prices amid a global glut. Futures slid as much as 2% in New York. Producers from outside of the organization of petroleum exporting countries, mainly OPEC, including Russia, will be invited to the meeting. Gold had a range of almost $15, ended on the negative side, trading at 1,124 now. Silver had a range of 30 cents at 14.61 now. WTI had almost 140 range at 45.76 now. And natural gas is trading at 267 at the moment with a range of 7 cents. Thank you, everybody. This was today's European Session Outlook. I wish you a successful trading week. Goodbye.